Hello guys, welcome back to my channel. Today we are back with another video. After a lot of research, we came up with 5 of the best mid-cap company in 2023. So we will just have a look on the 5 different companies whose market cap should be below 10,000 crores, but who is actually comes under the mid-cap industry and especially who can be a multi-bagger. So today, let's start the video with the first company in our list. So the first company is V-Guard Industries Limited. So the current price of the company is 261.95 rupees. In 1 year, the company has given almost 17% positive returns to its shareholders in last 1 year. The company comes under the small cap industry and the company sector is industrial. So now let's have a look about the company. So the company has a various type of businesses, but the company was basically involved with the manufacturing, trading and selling of electronic and electrical products, which includes electric water heaters, fan, switch gears, PVC cable pumps and many more. So these are some of the things which the company manufacture, trade and sells in the market. So now let's have a look on the graph of the company. So the first one is the sales growth of the company in 1 year, 3 year and 5 year. So in 1 year the company has given almost 28% return, whereas in 5 year the company has given almost 10.75% CAGR returns in sales growth. Similarly with profit growth, it was around 13.98% for 1 year, similarly with 9.42% in 5 year in terms of CAGR. Similarly, if you see on the ROE, which is return on equity, for 5 years it was around 19.54%, and for ROC, which is return on capital employed, for 5 years was around 25.28%. So this is the first company in our list. Now let's have a look on the fundamental key highlights of the company. So the market cap is nearly about 11,000 crores. The PE is around 47. The ROC, which is return on capital employed, is 21.8. You can just pause the video and have a look on the fundamental key highlights of the company. But the overall, the PE is around 47. The ROC is around 21.8. The EPS, which is earning per share, is 5.57. And the ROE, which is return on equity, is around 17.4%. So now let's have a look on the pros and cons account of the company. So in pros, the company is almost debt free. The company has expected to give a good quarterly results. And the company has also maintained a healthy dividend payout of 23.8%. Whereas in cons, the company is almost trading around 8 times its book value. The company has delivered a poor sales growth of 10.8% in the last 5 years, and the promoters holding is also less in the last 3 years of around negative 8.19%. So this is the first company detail. So the second company in our list is the Birlasoft Limited. So the current price of the company is around 300 rupees, whereas the all-time high was around 585 rupees and the low was 260 rupees. In 1 year, the company has given almost negative 47% returns to its shareholders. So you can say that the Birlasoft company's shares is actually trading almost around 47% discount. So this is the second company in our list. Let's have a look about the company. So now the company is actually a technology company which is engaged in the computer programming, consulting and related activities. Now we will have a look about the company's graph of the various industry, like the sales, like the profit and various things. So in sales, the company has given almost around 25% returns in 1 year, whereas in 5 years, the company has shown a growth of 9.2% CAGR in sales growth. Similarly, if you see with the profit growth, the company in 1 year has shown around 52.95% profit growth in 1 year, whereas in 5 years, it was around 11.83%. Similarly, if you see the ROE for 1 year was around 19.86 and for 5 years, it was around 14.38. Now the last one is the ROCE, which is return on capital employed. For 1 year was around 27%, whereas the 5 years was around 19.31%. So this is the overall graph of the company. Now let's have a look on the fundamental key highlights of the company. So we will have a quick nap about this stock. So the PE was around 17. The market cap is around 8,000 crores. The ROCE, which is return on capital employed, is around 25%. The EPS, which is earning per share, is around 17.4 rupees. The ROE, which is return on equity, was around 19.3%. So this is the overall view of the fundamental analysis. If you want to see more, you can just pause the video and have a look on all the details about the fundamental key highlights. So now let's have a look on the pros and cons account of the company. So in pros, the company is almost debt free. The company has been maintained a healthy dividend payout of 27.4%. The promoters holding has increased by 1.16% in the last quarter. Whereas in cons, there isn't anything mentioned in the cons, but overall, the company is overall a good one. Now let's have a look on the third company in our list, which is the First Source Solutions Limited. The current price of the company is around 103 rupees, where the all-time high was around 191 rupees and the low was 93 rupees. The company has given almost 44.8% negative returns to its shareholders in the last 1 year. So this was the graph of the company. Now let's have a look about the company. So the company is a provider of a range of business process management services. The company provides its services to a range of sectors, include healthcare, telecommunications and media, banking and insurance, and many more. Now let's have a look on the another sheet, which is the graph of the company. So the sales growth for 1 year was around 20% CAGR, whereas in 5 years was around 11% CAGR. Similarly, with profit growth for 1 year was around 5.7% growth, whereas in 5 years was around 15.5%. Similarly, with ROE, which is return on equity, for 1 year was around 17.57% return, and in 5 years it was around 12.38% CAGR growth. Similarly, if you see the ROCE for 1 year was around 20.95, whereas for 5 years was around 14.52% growth in ROCE. So this is the graph of the company. Now let's have a look on the fundamental key highlights of the company. So in fundamental key highlight, the market cap is around 7,200 crores. The P is around 15. The ROC, which is return on capital employed, is around 16.6%, whereas the EPS, which is earning per share, was around 7 rupees. The ROE, which is return on equity, is around 18.3%. So these are the few fundamental key highlights of the company. Now let's have a look on the pros and cons account of the company. So in pros, the stock has provided a good dividend yield of 3.37%. The company has been maintained a healthy dividend payout of 51.4%. Whereas in cons, the company might be capitalizing the interest cost. So this is the overall detail about this company. Now the fourth company in our list is Gujarat Ambuja Export Limited. So the current price of the company is around 253 rupees, whereas the all-time high was around 400 rupees and the low was 163 rupees. In 1 year, the company has given a good returns to its shareholders, which was around 52.1% in just 1 year. So this was the return which has been provided by this company to its shareholder. So now let's have a look about the company. So the Gujarat Ambuja Export Limited is a orgo processing company. The company's product portfolio includes solvent extraction, edible oil, refining, cotton yard spinning, maize-based starch, and power generation through windmill and biogas. So the company has a wide diversified range of businesses. So now let's have a look about the graph of the company. So the first one in our list is the sales growth. So in 1 year, the company sales growth was around negative 0.74%, whereas in 5 years it was around 7%. In profit, the 1 year profit growth was around 40.6%, whereas the 5 years profit growth was around 25%. The ROE, which is return on equity for 1 year, was around 25.07%, whereas in 5 years it was around 19.23% growth. The ROCE, which is return on capital employed, for 1 year was around 30.56%, whereas in 5 years was around 21.21%. So this is the overall graph of the company. So now let's have a look on the fundamental key highlights of the company. So the market cap of the company was around 5,800 crores. The stock's PE was around 13.3. The ROC, which is return on capital employed, is 30.4%. The EPS is 19 rupees, whereas the ROE, which is return on equity, was around 25%, and the promoters holding was 63.8%. So this is the overall detail of the fundamental key highlights of the company. You can just pause the video and have a look all the details about the fundamental key highlights. So now we will have a look on the pros. So in pros, the company has reduced debt. The company is almost debt free. The company has delivered a good profit growth of 25.1% CAGR in the last 5 years. Whereas in cons, the company has delivered a poor sales growth of almost 7% in the last 5 years. So this is the overall pros and cons account of the company. Now the last company in our list is DCM Shriram Limited. So the DCM Shriram Limited's current price was around 895 rupees. All-time high was around 1263 and the low was 831. The company has delivered almost negative 8% returns to its shareholders in the last 1 year. So now let's have a look on what the company is. So the company is a holding company, and the company offers sugar, power, alcohol, industrial fibers and related products and chemicals. So the company has a diversified product portfolio. So now let's have a look on the different graph of the company. So the sales growth for 1 year of the company was around 15.13%, and for 5 years was around 10.5%. Similarly, with profit growth for 1 year was around 58.31%, whereas the 5 years was around 15% in the profits growth. The ROE, which is return on equity, for 1 year was around 20.53%, whereas for 5 years was around 21.39%. And the ROCE, which is return on capital employed, for 1 year was around 25%, and for 5 years was around 23%. So this is the graph of the company. Now let's have a look on the fundamental key highlights. So the market cap is around 14,000 crores. The PE is around 12.3. The ROC, which is return on capital employed, was around 25%. The EPS, which is earning per share, is around 72 rupees, and the ROE, which is return on equity, is around 20.6%. and the promoters holding is around 66.5%. So this is the fundamental key highlights of the company. Now let's have a look on the pros and cons account of the company. So in pros, the company is expected to give good quarterly results. The company has been maintained a healthy dividend payout of 20.4%, and in cons, the company had delivered a poor sales growth of 10.7% in the last 5 years. And the second one is the company might be capitalizing the interest cost. So these are the 5 mid-cap companies in our list. So tell me in which company you are going to have some position in the upcoming years. And just to remind you, this is not a buy or sell recommendation video. This is just for your personal knowledge and do your own analysis before investing. Thank you so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. Bye bye.